and welcome to the first episode in season 5 of the Energy Talk podcast, where we tell stories about sub-Saharan Africa's energy transition. My name is Olubumi Olajide. I'm so excited to start this new season, our most ambitious project yet, where we will focus exclusively on decentralized renewable energy projects in sub-Saharan Africa and focus on the point of view of financiers, policymakers, and operators that are working towards a sustainable energy future. On this episode, we're speaking with James Fabola Jr., the Chief Financial Officer of Arnergy, a clean energy company providing solar solutions to residential and commercial customers. Arnergy is also a superstar in the African clean tech space. In 2019, Arnergy raised $9 million in its Series A round, led by Breakthrough Energy Ventures, along with Norfund, Olon, and EDFI Electrify. In February this year, Arnergy raised another $3 million from Olon in a bridge round and are gearing up for a big Series B fundraise soon. Now, James has some history with Arnergy. While he worked at Norfund, James was on the team that did the Series A investment. Now he is the company CFO and will speak to us on this episode about the challenge of operating in an environment of foreign exchange volatility, subsidies on petroleum products, and a spending power reduction in their largest market. But first, we'll hear from James on how he first got into the clean energy sector.
I started out in private equity, work with a private equity fund, sector agnostic. We did everything, right? And one of our investments was in a gas-fired company, right? So that was my first foray into power.
Yeah.
Some sort of clean energy in a way where it was CNG and pipe gas powered. So understanding the integral role we play in supporting our customers, whether it be residential or commercial, given that for them, their energy costs accounted for as high as 40% of OPEX.
Okay.
So what we were doing and the impact was palpable. When I moved to Norfund, the Norwegian DFI, then I started to work on renewable energy, which is solar. So that's been my energy journey. So I'll say it started out like 2015.
Yeah, sure. And right now with Arnergy has been making some pretty exciting moves within the renewable energy space. It's reaching a stage of maturity that I think is still very new for renewable energy, especially in Nigeria and Africa as a whole. What did it mean for you to join Arnergy, and in your capacity as CFO, what is the challenge that you're trying to solve?
So my Arnergy story started in 2019. So while I was with Norfund, we were part of the Series A investment where Arnergy raised $9 million. So we participated in that alongside BEV, Olon, and Electrify, EDFI, the European DFI, right? So that was my first interaction. After that, as you know, I went to do other things, went to business school, then joined the Clean Energy VC Fund, Pan-African. And then I got reached out to by the CEO, said they were looking for a CFO. They were on the verge of fundraising. Would I be interested, right? And at the time, I started to get the operational itch. I mean, after doing investments for about a decade, you start to wonder what it would be like on the other side. I had always loved what I'd done. So part of me still loves investments, right? But I thought this would allow me leverage the skill set, but also be more impactful, help drive fundraising, and then also learn the day-to-day business. Time will tell if I made the right decision. I think I've aged quite a bit in 1 year. It is exciting. A lot happens. Every single decision you make matters, starting right from the gate. You know, not to say it wasn't challenging on the investment side, has its own kind of challenges, right? But there are lags between decision making and where like the impact of that crystallizes, whether it's risk or it plays out in the way you want. On the operational side, a lot more frequency with decision making, and the results are immediate. You know, you price wrongly, the market reacts a certain way, right? You don't plan your supply chain, the risk of stock out, right? You don't do what is required in keeping people incentivized. You get a resignation letter, So it's so, but it's exciting. It's also been great for my personal development.
Yeah,
I wouldn't change a thing at this point. So, and everything is, again, this was pre what happened from say June last year, right?
Yeah.
So it just got a lot more exciting with macro events being in our favor, being net positive, right? And then we're just taking advantage of that and trying to sell that renewable energy story and tap into that demand supply gap that has obviously widened in recent time.
So this is a very unique experience. Not every time you have somebody that was on the investment team looking into a company, turn around and become the CFO. So while you were still at Northfund, then you were looking at Arnergy as a deal, decide whether or not it was worth putting in that initial investment. What were the conversations within your team, if you can share that? And did you ever think you would one day see yourself as CFO of the very company you were deciding whether or not to invest into?
Yeah. If I said the plan was always to become CFO, I'll be in trouble. My ex-colleagues from Northern will be reaching out to me and saying, were you really objective? You did this deal? So to answer that question, no. And I did not envisage that my career would sort of come full circle. And without saying much, I think Arnergy was an interesting value proposition.
Yeah.
It was still a very nascent space. In some ways, still is, right? But we liked that they had clear differentiation points. There was still a lot of talk around energy access at the time. So a lot of the guys were gravitating towards rural, suburban, powering villages, providing Pico solar, very small systems. That obviously makes sense. And then there were the few guys who were already thinking of large megawatt projects, right? The likes of Daystar, right? So, but the key was always to play in that missing middle. There's that customer segment where we want energy reliability, where they're getting power as low as 20% from the grid, and then using diesel, in some cases petroleum, to bridge that gap. So having gone through the value chain, Arnergy had done a lot. Again, Arnergy had been the co-founder of Femi Adeyemo, played the entire space, like left his cushy job abroad and came to Nigeria, some sort of pioneer, in some ways ahead of its time. When he started Arnergy, diesel was still heavily subsidized. Petrol obviously subsidized. The grid was subsidized and unreliable. So now we have conversations around the reason why he left what he was doing to come do this is for now.
Yeah.
But it's taken circa 10 years to do that, right? So, but the differentiation play was clear. Obviously, you want to back the right people. And in Femi at the time, everyone liked the fact that he was entrepreneurial. He had built a solid career in the telco space. And he felt like a lot of the learnings could transition into what he was doing now was vested. You always want to back people who are all in. It's against one leg in, one leg out, right?
Yeah.
So, and the space was we knew we would have to be patient. We didn't know we'd have to be 10 years patient, but we knew we'd have to be patient, and that a lot of the elements that we are bet on we're now starting to see play out.
Yeah, and that's a very interesting story, because a lot of the conversations I had on the podcast, we focused a lot on off-grid especially, and recently there's the DES program that was talked about during the forum, and that's a huge incentive for off-grid development especially, and there's less of a subsidy for the residential and the more commercial space. So there's always been this conversation of like, what are we actually pushing forward? And because of that, a lot of companies felt like to be competitive in this space, they had to operate in that particular space. But for Arnergy to have focused so strongly on this segment and remained committed to that is what I find the most impressive. And do you think that is just just comes from the way Femi operates as a founder CFO, or is it something that's just spread across the entire team, that this is what we want to do and we're going to wait until we can do it the best?
Yeah, so I mean, obviously, Femi is the leader, right?
Yeah.
And you buy into the vision of the leader, and then you get a clear execution roadmap. Then you bring on board the right people to help execute.
Yeah.
Right. So, but bottom line is, it all starts with him. The messaging has always been clear, and it has to be in a space where it was going to take some time. If your messaging is not clear, people get disillusioned. They'll come in, do a few months, and they're like, what are we doing? So your biggest job as a as an entrepreneur, as a leader, is to ensure that that messaging is clear. This is our focus. This is what we're trying to do. Would we experiment? Obviously. Would we be tactical? Because it would be crazy to be dogmatic in such a nascent space within a Nigerian landscape that would throw all its challenges at you. So you cannot be inflexible.
Yeah.
But the messaging also cannot get distorted over time. You can, and I use the word pivot carefully. The end game remains, but if you have to take a slightly different approach to get there, you do that.
Yeah.
But for Femi, as you would always say, for him, it was always clear, right? And I try to be very careful with what I say about other segments across the renewable energy value chain, because they're all playing their different roles and they're all driving impact. Now, obviously, I'm biased.
Yeah.
I would argue the segment we play in is more impactful. I don't know if I should make that argument here, but I feel strongly about that. But we always felt like this was the most sustainable path, right? So even when we're raising Series A money, I say we now, the Arnergy, because I wasn't there post the investment, it was clear that you needed long-term capital to weather the storm, go through that learning curve, build a body of knowledge, and then wait for when the market is ready for you to take off, right? So it wasn't we'll continue to subsidize this, we will, like, one of the things I liked that I heard from the EIF event is it cannot be grant focused. The grants are more supposed to be catalytic, like an enabler, but bottom line is you have to have a line of sight to sustainability. Now, profitability is no longer a buzzword. People are being tasked to, okay, how quickly can you get there? Are you there?
Yeah.
Can you stay there? How big is that market? So, and that's the mindset that the business has always had. So now I'm just excited that all of the elements are coming together and we are trying to ride that wave.
Yeah. So you've already painted a pretty good picture of the RNG story so far, but now that you are in a position where you've gotten past the early stages of funding, what is the story now that you're selling? Because initially I know you can sell on on market potential, but at this stage I'm guessing at the stage of maturity it's a lot more about numbers, it's a more about projections. How has that been different, especially since you came in as CFO preparing for that next phase? How did the conversations with the potential investors change, and how is the team preparing for that next phase?
It hasn't changed per se, the story we're telling, only that we're quite conscious of what we're the part of the roadmap we're amplifying, right? It starts out with what you've done. Okay, we're not at the level where we can spend too much time on what we will do. You have to show us what we've done, right? In a space that is largely fragmented, still largely informal, we take great pride in being one of the few guys who are venture backed. One of the few guys who are venture backed and have been successful and have stood the test of time. Again, no knock on guys who have maybe fallen by the wayside. It's a difficult sector, difficult landscape, right? And naturally, if you go look at the curve, the expected curve of an industry, it starts out high growth. Some of the players, some fall by the wayside. The guys will stay, and mass market share consolidate, and then that industry sort of maybe not flattens, but the growth is less steep. So it's not natural that a lot of businesses are falling off. But what we tell, the story we tell is we're still here. There are not many businesses that have been here for 10 years in this sector. We're here. And that translates into what gives our stakeholders comfort. If you wanted to get a solar system now, if you called a regular installer, by the way, and say you want a system, he'll probably go to the market, get solar panels from here, get inverters, get batteries. They'll probably give you a warranty. There's the risk that you call that guy or whatever number you're giving next year, and he's folded up, he's maybe gone to do something else, relocated or whatever. What we tell people is we've been here. When we give you a 5-year warranty, 10-year warranty, you can take it to the bank. That addresses a lot of the concerns customers have, right? So for us, the story is we've been here, tried and tested. We know the space now. This was the plan all along. Did it take longer? Yes, but we're here. We're venture backed, we're credible. You back us, we use that funding to then take advantage of the opportunities that have been magnified now by recent macro events.
Yeah.
The second thing is also we have a clear line of sight to profitability. Obviously, I can't give you numbers, but we are excited about where we're at, right? The goal is also to prove that, because there are still skeptics that believe the solar industry is a fad, it's a myth, it's a,
Yeah.
So for us, we're proving that it's a solid business, a solid long-term business, and everyone we talk to that cares to listen, we're able to make that point, and they're excited about that.
Yeah. So going back to those macroeconomic factors that you mentioned, a lot of them have obviously played to the benefit of the renewable energy sector in general. The subsidy being removed for petrol and the diesel price going up has made other alternatives, other more viable alternatives then to getting a solar home, for example, a lot more expensive. For the more affluent members of communities, the tariff increase recently went up, and that's like a 4 times increase to what they are paying per month. So all these things have been beneficial in a way, because then it makes the argument for having a solar system with the more expensive upfront cost, but the much lower timeline cost of doing your time of ownership having good. But then on the flip side, there's also the FX challenges. So Arnergy is not just an installer, obviously. You're also an OEM. You bring in your own equipment, and that's I'm assuming has a lot of risks when it comes to FX especially. So how do you balance out the good that's happening with the bad, or maybe so it seems affecting everybody, maybe it's not necessarily bad, but with the ever increasing risk of the FX not being exactly where we might want? So do you see it all as good, or how do you balance all these factors that are coming into play?
Yeah, so I mentioned earlier that in the last one I've probably aged significantly more than I've aged over the last, right? FX probably accounts for 60% of that. And what I tell my friends and even some of my colleagues is, I always resist the urge to become an FX trader, because that's not what I do. I've never done it if I don't know how to do it. But the job almost forces you to be, because if you're bringing in a lot of your components like inverters, batteries, panels, that has a play.
Yeah.
So there is the operational concern around. Up until a few months ago, it was one thing to even have your money in Naira, but be able to get FX. So that was a challenge. I think liquidity has improved now significantly, which is testament to some of the policies by the government. So there was that, but let's assume that has fallen by the wayside, right? What we then started to think of is, because ultimately, if you're not able to pass it on to the customers, you have to do something about it again.
Yes.
Thinking sustainably, profitably, right? While a lot of us were excited when petrol subsidy was removed, the assumption at the time was it would continue to dance with the exchange rate.
Yeah.
That hasn't happened, which means now, and I hope I don't get in trouble for saying this, but subsidy was coming through the back door again.
Yeah.
So it would have been easier if, as we continue to do our LCOE, solar is now definitely cheaper than diesel. It's not even a discussion. Petrol, again, I would argue effectively we are, but it would have been, I wanted to say it would have been nicer, but not for the common man. But from an operator standpoint, if it continued to move with that. So that isn't the case. So we still have to compete. But that then means you cannot continue to just pass it on 100%. Right? So we've then had to look inward.
Yeah.
Operationally, you then have to be more efficient, more belly tightening. Sourcing wise, you cannot afford. I tell a lot of my colleagues now that the cost of not doing what we are supposed to do at the right time has become a lot more expensive.
Yeah.
You feel the pain almost immediately, right? So we're a bit more intentional, for lack of a better word. I'm a lot more paranoid. That's the only way I know how to work.
Yeah.
Time will tell if it's sustainable or if I'm doing it right. But that's the only way to actually get things done. So when you're having conversations with your counter, like your suppliers, you're having frank conversations around your pricing, you're getting a lot more anal about cutting out inefficiencies. One thing we've also benefited from is macro global trends. Costs of components are falling. So as at last year, battery costs had fallen by like 30-40%. Solar panel costs, since I've been in the renewable energy space, has always been this way. Inverters. So we're also taking advantage of that. So from last year, given where we saw the market was headed, and while most of the macro impact was positive, we knew disposable income had also suffered. Right. So for you to meet customers at a price point that makes sense without passing on the full FX impact, you're going to have to cut costs somewhere.
Yeah.
So that's where we spent a lot of time on, a lot of our partnerships. And that's where your brand being venture backed and your credibility starts to yield fruit.
Yeah.
So when people, in fact, I would even say we've been on the offensive. We've also been getting a lot inbound, right? Because the world is now focused on our market, whether they want to play directly or indirectly.
Yeah.
So they maybe I can imagine a guy in Shenzhen goes on Google or somewhere in the world wants Arnergy would pop up page one, right?
Yeah.
One of the few venture back guys. You look up our stakeholder base, Bill Gates. Bill Gates came last year. That also helps just strengthen our credibility. So we leveraged on that dynamic between the guys who already have a relationship with, where we were then negotiating better terms while offering them long-term partnerships.
Yeah.
Because we're like, we've been here for some time. We will, knock on, we'll be here for some time. This whole sport type relationship, order-based, isn't what the market requires right now. We both have to think long-term.
Yeah.
Right. So we started to see a lot more of that. Then also it became competitive amongst them because there are only so many people we can deal with. So it became sort of like a beautiful bride. With quite a lot more suitors. So we took advantage of that. To in a nutshell, obviously my pricing is not static, right? If FX moves, I move. I have to, but I also have to do a lot of the homework, operational sourcing homework. So I know I'm not passing on the full, because ultimately customers come first. There's no point putting products out there that they can't afford. That defeats the whole purpose of what we're trying to do.
Yeah. So we can just touch on this very briefly, but a lot of conversations I've been having about how we can move away from being so dependent on suppliers from outside of the country and move more towards local manufacturing. It's something that's such a huge challenge, and it doesn't really seem like something that is not commercially viable right now. But do you think that is one of the key ways that the sector can become more stable going forward, or do you just think that it's nice, but it's a much smaller part of the solution?
So there's usually two answers. There is right now we're having a conversation that the world will see answer. Yeah. And then there's the answer if we're having drinks. So I'll try to straddle somewhere in the middle.
Yeah.
There is potential. Simple, right? There is. The elephant in the room is competitiveness from China.
Yeah.
It will take quite a lot of work, scale, operational efficiency wise, to be able to compete with China. That is if it ever happens, because China, as you know, they benefit from a lot of policies, rebates from the Chinese government, which is to push this, right? That's one. But that being said, right, what I also tell people is beyond pricing, there are problems which local manufacturing can solve, which is that lead time.
Yeah.
Like everything from China today takes 3 months.
Yeah.
If we needed a quick supply, even at scale, today, it's challenging, right? So when you deal with, which is what I was saying again, I tell people we cannot afford to make certain, like, if you miss. So one of the things I learned early switching to this side, I had an idea how impactful the Chinese holiday can be.
Yes.
I mean, on the investor side, you're just asking, maybe you see subpar Q1 numbers or Q2, you're like, what are you guys doing? You're like, well, on this side, if you have a certain window to place your orders and ensure it's shipped before the Chinese holiday starts.
You don't want to get caught in
if
Chinese
not,
New Year, especially.
Like your Q1, Q2 can just go underwater, just like that.
Yeah.
Right. So things like that, local manufacturing can solve. That's one. Two is I also think it requires a bit of, now I wouldn't say backward integration, because then there are questions around moving away from your core, doing what. There has to be a collaborative effort to scale local manufacturing. It cannot be a company just setting up in isolation and saying we want to produce 100 megawatt panels per annum. If you do that as a standalone trying to compete with China, that won't work. But if you're part of a larger ecosystem of a company, say like Arnergy, that will say will consume 1 million panels in 5 years, and you have a partnership, an engagement or something, whether it's by virtue of an investment or whatever, those guys can take that order book and go to the bank with it. Solves your financing problem, solves your planning problem, solves your sourcing problem, right?
Yeah.
Because you're like, these are the guys that will take on, this will be my anchor customers. And then based on that, you then maybe build other customers around it, right?
Yeah.
So it also gives you stability in pricing, but it also has to make sense for a business like Arnergy, right? And you're able to do that because even though there are compromises, trade-offs, it gives you stability. And then on the back of that, you have a base to scale, and Arnergy obviously continues to, right? So bottom line is, I see a world where local manufacturing solves a number of problems.
Yeah.
People say FX. I say yes, but there's still that indirect impact you cannot do away with.
Yeah.
The inputs of the guys producing locally, some of it will still come from China. But maybe when you then think of maybe cheaper labor, then you start to see where the value. Then ultimately, you then have to start to have conversations with the government, because policy will continue to remain critical, right?
Yeah.
There are those that argue against protectionist policies. I say I get that, and in a business school, that was frowned upon. But a lot of the big businesses globally have benefited from that, right? So, but you need to get to scale first, because if the government comes and bans importation of solar batteries, inverters, panels, we don't have capacity locally to meet it. So you have to build that first. And as you start to get big, then you start to say, okay, maybe it's tax holiday, or whether it's on the duties, or whether it's to incentivize. So it will happen eventually. I don't know if it's happening in the short term. But obviously some people have to start. I mean, it took us 10 years to get here. So I hope it doesn't take them 10, but it's also not a snap your finger and get things done type of thing.
This is Olu, host of the podcast, interrupting this episode to let you know that we're looking for sponsors to support our work covering the sustainable energy transition in sub-Saharan Africa. In the 5 years since starting this project, we've grown the platform to a top 10% ranked podcast globally, and we're looking to go even further. If your organization or fund would like to learn more about reaching thousands of engaged listeners monthly, then reach out to us with the email in the show notes of this episode. And for our listeners, you can continue to support us for free by sharing this episode with the people in your network, leaving a review in your favorite listening platform, and signing up to the newsletter linked in the show notes of this episode. Now, back to the conversation. So one more thing that I've noticed that Arnergy has had to build its own in-house competency is it's how it offers financing on the installing side to the customers. How has that been affected by FX, increased cost of diesel? Has that made that offering of financing for products they pay X amount of money of it down, and then they spread the cost over like 6 or 12 months? Has that become a more attractive option based on anything that's happening? And how does Arnergy plan to support that as, in theory, that continues to grow?
Yeah, I mean, and it's always still an ongoing debate, like internally, even within the company, and stakeholders on what's the way forward. So today we have 3 engagement models. So there's outright sale, which is cash sales. There is lease to own, which is what you're referring to, and then there's energy as a service. Energy as a service is essentially an operating lease. You pay for what you consume. We retain ownership of the system. Lease to own is you pay over time, and at the end of the lease, the ownership transfers to you. Either two, the business made the right decision to be an outright sale business, like prominently, right? And again, it was part of the timing where the sector was at. It was the conservative and smart approach and sustainable approach, which is why the business stood the test of time. Don't forget, post Series A, then COVID happened. So a lot happened within then. So it's testament to Femi and the guys who were there before me that Arnergy stood that test of time. Part of it was making the decision to be an outright sale business. But as soon as we started to see this macro effect and we're excited about that, we then had to have frank conversations around, we cannot continue to be an outright sale business, right? Like we said, boom diesel prices, great petrol prices, amazing tariffs now, somewhat cost reflective, but disposable income has suffered. That's one. Two is even the well-to-do guys, if you give them the option to buy a system, 10 billion naira outright, or finance it over 10, 12 months. Surprisingly, they all usually pick the financing option. So if the guys who can afford to also want to finance, then it became clear, right? So we started to think in that direction. And what do you need to get that done? Raise the right type of financing. You cannot, MPR today is 26.25, right? Cost of financing locally has gone up. That is probably not the right type of financing long term. So a lot of work goes into, again, we're so customer centric that when we find challenges, the first thing is not, can we pass it on to the customer? We go inside first. We go see what we can fight for.
Yeah.
Operationally, financing wise, right? And then we come back and say, right, so we've raised the right type of debt that allows us finance at a more affordable rate, right? But the concern for everyone around the table starts to become heightened credit risk, right? And it's also not the greatest for cash flow. Outright sale, you get all your money at once, right?
Yeah.
Financing, it's over time, so you have to plan for that. Your cash forecasting, being paranoid about your cash runway, obviously that's on me. So we do a lot more work on that. But it's imperative. I tell everyone that cares to listen. Now, does that mean we do a 180 and become, no, we will never be a bank or financial institution. We're at core a renewable energy business. The reason we're doing this today, again, maybe I was about to say not a knock on the banks, or maybe a slight knock. Maybe they deserve it. And again, if 60% of my issues are FX, the banks are probably 30%. Yeah. They stress me. Well, we're making peace. At the end of the day, right? Today, and maybe to be fair to them, for the right reasons, they're still very skeptical around solar financing. They're saying all the right things. They're talking to all the right stakeholders. I ran into some of them at AF. I'm like, you guys are here again? They're like, yes, well, we're just trying to get comfort around the landscape, the risks, because they're a business at the end of the day.
Yeah.
I was, what's the word now? I found myself looking over the fence when a lot of them were reporting their Q1 numbers and like, all this money, all this profit, and you guys don't want to give us money, right? Yeah. But I quickly told myself, there's a reason they've been successful. Yeah. Because they and banks smell blood. They know where money is. So we still need to do the work. Yeah. When the industry takes off, and it is taking off, they will come. So if they're not here yet, maybe I should be looking inward than blaming them. Yeah. But it's easier for me to blame them, so I'll blame them. Right? But I know that when we figure it out, all the elements, right, the technical risks, the operational risks, they will come. And so maybe over the next 24 months, we still have to do a lot more financing than our stakeholders would like, because we're not supposed to become a financing business. But when you do that and you build that market, you build a credible loan book with high credit quality, they would then come and say, guys, let's take this off you. We know how to do this better than you. You continue to focus on your core competence. But until then, we're going to have to.
And it's something that I've always wondered about when operators get to certain levels of scale and growth is, how do you resist the temptation to branch out of your core competency? You know that what Arnergy is really good at is just on the equipment, delivering it to customers and being that. But then there are so many other needs that the environment you operate in doesn't necessarily support you on, that you need to now branch out and do it. So how do you define those boundaries between like really focusing on what your core offering is and building all these additional supports that you need that the market will not offer to you within the time frame that you need to execute on your own goals?
So, history is replete with businesses that where there was a strategy drift and then they paid for it. So, they teach us a lot of that in business school. You hear a lot of those stories. I think I enjoyed my time at INSEAD, right, where I did my MBA. But if there was one knock we African and Nigerian students had, as there were not enough case studies from Africa, right? So we felt like a lot of the theories being discussed were not peculiar to us. So a lot of what you're saying, don't pivot out of your core competence, don't do this, don't do that, be as nimble as possible, asset light. But I tell you, if you look at all of the businesses that have come in to Nigeria at some point with that mindset, they quickly realize that the infrastructure deficit is so massive that you cannot outsource your dependencies. You have to sort of solve them.
Yeah.
Because they have significant implications on you delivering to the customer. The problem then becomes when you then start to build out, you're no longer asset light. And then that's when the risk of moving away from your core competence.
Yeah.
But the reality is, if you're going to solve problems and ensure the customer gets the best experience, you're going to have to, The other thing is also what does the landscape compensate? Scale or agility? We've seen, in my view, again, happy to be educated, but you get compensated for staying the test of time and getting big as quickly as possible. Maybe if I could learn the word from the banking crisis a few years ago, too big to fail, right? And how do you get big? Do you depend largely on organic growth to the extent that you can? A few years ago, if you picked up any pitch deck of Nigerian business, you'd see the macro indicators from 200 million people, average age 19.2, growing population, increasing disposable income, all of that now, the macro, right? So how do you scale? How do you solve your problems? Like one of the things we were discussing earlier, do I start to reduce my dependence on importation of panels? Do I backward integrate? Do I start to produce my own panels? Or can I partner with someone that is producing that as well? Some guys will argue, well, your competence is not manufacturing panels, maybe don't go there. But I'm like, at a certain scale where I'm needing millions of panels, do I control my own destiny?
Yeah.
One of the things that gives me the biggest headache now is logistics. Every day we're having arguments around in-house versus outsourcing. Outsourcing is great as it keeps you nimble. You don't want to have 10, 12 trucks you're managing. But those guys, they will disappoint you.
Yeah.
They will. They will. Something will happen. I didn't realize how long it takes to get stuff from Lagos to like Rivers. A truck broke down twice. And the problem is when it breaks down in, I don't know, let me not go and expose myself that I don't know the Nigerian geography well. But if it breaks down halfway, the company sends someone from another truck from Lagos to go meet there. It takes the same number of days it's taking, then they offload. And then, so you're like, then you have a customer on the other end just shouting at you, but they're like, it's not really our fault. But you can't tell the customer that. So do we just have our own logistics business or logistic function where we can speak to the quality of our trucks, or the driver gets there and is rude to your customer? And we've seen it happen. Like, and the customer, of course, all customers are obviously, we regard all our customers, but sometimes you just go there and you just speak to anybody anyhow. If it was in-house, we wouldn't do that. So, but there are question marks on, so how do we do going forward? So now that we're at a certain size, we can still balance it, but at a certain size, we're going to have to make frank, honest decisions. There are people that would say, no, you're not a logistic company. That is not your core competence. Don't go into it. There are businesses that have gone into it and failed. Well, we will make that decision when we get there. But the point I'm trying to make is the discussion in Nigeria, I can speak for Nigeria, is different from in the West, where they have different things they're dealing with. So these conversations are evolving. We take it on a case-by-case basis. Is it manufacturing? Is it logistics? For example, there are those that would argue, should you be financing off your balance sheet like we discussed? Should you be warehousing that in a financial institution? Time will tell. Everyone has a different playbook. The playbook that wins is the one that knew what they were doing in retrospect. Right. So
Yeah, that is very true. And one more thing. So a few months ago, we had a conversation. So we've had a conversation with a few investors in the past, and particularly the conversation we had with Persistent. We were talking about how there's not enough information around exits, particularly from the companies that they invest in, and across the sector, across borders. It's not just something that's very unique to the energy sector in Africa. It's every sector in Africa. You see an acquisition, you don't see numbers. You see exits, you don't see numbers. It's everything kind of like shrouded in mystery. But I am of the opinion that you need to see positive traction growth in order to attract the right kind of people into the sector. So just like trying to convince somebody who is like really talented, just got out of school, thinking about what sector to go into, immediately they're thinking about tech because they've seen like big numbers. But you're trying to convince them, there's actually the energy sector that needs really, really talented people, but they just don't see as much deal numbers. So when when it comes to talking about scale, especially with Arnergy preparing for that next level up, how do you look at the conversation around having a lot of open numbers? And when it comes to thinking about the next step, is it raising another series? Is it acquisitions? Is it potentially looking forward to an exit, going public sometime? How does Arnergy see its future shaping up specifically in this market?
So you're talking numbers wise, like data wise.
Yeah.
It's interesting because obviously I started out in private equity and everything is shrouded in, maybe the word isn't secrecy, but
yeah,
because it also just reduces the burden of being a public company, because that process of reporting is not easy. That's one. So it's also what your competition could potentially use that information for, right? It's also more peculiar, more relevant in mature industries where you're just only moving the needle. Market share can move by 1% or less depending on, and then if your competition knows you sold this amount of quantities last year, from your revenue they can walk back to price, and maybe there can come a pricing war or something like that. I think for our space, I'm open to being more open. I don't make the decisions, obviously. Ultimately rests with the CEO and the board. What I think the industry could benefit from being more open with numbers, because again, there's a lot of wrong information out there, which is doing more harm than good. And information being pushed by, for lack of a better word, people who are not the best ambassadors. So I think we need more people like Arnergy, more competitive, who are doing the work, coming out to say what is really happening, giving authentic numbers to tell the true story. So I'm not averse to that. Does that mean we start to reveal revenue numbers? Maybe not so much. But a lot of the operational metrics, today we have a sustainability report where we're obligated to report that to our stakeholders. Can that be made public? Maybe. On fundraising, so everyone knows we're raising Series B. And we're actually on the verge of closing Q2.
Can you give us an exclusive on the numbers?
Not yet, right? So for us, we'll be excited to make that public once that happens. I mean, we closed a $3 million bridge round in Feb. And part of why we made that public was to signal to our stakeholders, everyone that cares to listen, because we consider the customers to be stakeholders, installer stakeholders, local supplier stakeholders, that we are funded, we're credible, we see what's happening in the market, the opportunity is massive, we're the guys to partner with. So it wasn't just to massage our ego that, hey guys, we have $3 million, come and celebrate with us. It was to tell them that we have what it takes, because there's still a credibility and trust issue in our market. So today, if you're discussing a big project with a counterparty, billions of naira, at the back of their minds, they're like, can you execute? Can you execute and give us the best quality and best aftercare? Initially, nobody puts it at the table, but it's a big concern because there are projects that have gone sideways because they were delivered shabbily, or the guys last minute couldn't come through, right? So there is still that. So for us, we take it upon ourselves that we need to be some sort of purveyors of, so personally, I'm open to us being open. The information maybe gradually would, like on funding, of course, you raise, you communicate that. It's great for everyone to know that funding is still coming into the space. On exits have been few and far between. But I like to celebrate every success that we get. I mean, when Daystar exited to Shell, I was pretty more excited than the Daystar folks. Because it just shows there's a line of sight. You build you build a decent, good business, somebody will buy it. Right? So it was good signal to the market that can happen, and hopefully that continues to happen. At Persistent, they've done a few exits. As you know, they exited PEG to B-Box. Right? Of course, details were not revealed, but that's also great. You build a business for a number of years. Let someone who's bigger and has value to add going forward take it on and continue. I know Starside has done a few acquisitions in recent times, so that's also great. That's part of what I'm saying. Should the playbook be get big as quickly as possible? Obviously, grow sustainably and profitably.
Yeah.
Yes, I think eventually, given where the market is headed, that's what will happen.
Okay. So for Arnergy's perspective, are you looking at it like you just want to keep growing and keep on the path of raising venture capital to do that, or is going public anywhere on your books, or what does that the maturity stage look like right now?
Again, I'll share my view. We're having a few conversations around, but ultimately, it won't be my decision. The simple answer is you keep your options open. I mean, the typical exit paths are IPO, sell to a strategic, like they started to Shell, or to another investor, right? I think for stakeholders, at different points, they will make the best call based on obviously commercial returns, but also which party is in the best position to continue to advance the objectives, the goal and objectives of the business.
Yeah,
I would like to see a renewable energy business go public on our continent. I think that would be great. I think that would be great because ultimately, when retail investors start to participate, that's when you sort of build a sustainable business long term.
Yeah.
Unfortunately, there are dependencies you can't control. If the macro is like this, IPOs typically follow that. So if at the time where you want to exit, so you have a financial investor where they have a 3 to 5 year timeline to exit. If at the time they want to exit, the macro doesn't support an IPO, then they will look at more viable options. So strategic. So I think if you grow, so one of the things I learned early is if you grow a solid business, people will come.
Yeah.
If you're having to go shop your company around, then maybe you need to spend a lot more time building your business. So we're primarily focused on that. But I think an IPO in the landscape would be great. That I will say, whether it's local, whether it's on the London Stock Exchange, it would be great.
Yeah. So this has been a very good conversation, and the way we like to end our episodes is you've already framed this challenge very, very well. You've already described the landscape and especially the way Arnergy is operating right now. With all the work you're doing, how would you define failure in the work that Arnergy is doing right now?
Failure. I think the obvious answer that comes to mind is if we're not operational in the next 3 years. So that's one. Like ultimately you need to weather the storm, like find a way to stay alive. Because if you wait till you're in trouble to need rescuing, nobody hands out life jackets in that market. So stay alive. Right? That's one, but that's a very low bar. And for Arnergy, where we're at, we're very ambitious, we're very excited where things are headed. So for me is in the next 3 years, metrics wise, probably 10 times revenue. Obviously super profitable. I think that's a personal and company target, right? And then just the impact, there's this thing where every time I fly into Abuja, I still see so many empty roofs in the landscape. We're yet to make a dent. I see it every time, and that's because most of the time I fly into Abuja in the morning. So maybe in Lagos, maybe I need to fly into Lagos in the morning and see what it's like. But Abuja, I'm just like, you see all these houses, these buildings, and the roofs still have no solar panels on them. So I think a personal goal would be even in 12 or 24 months, I fly and I see a lot more solar panels. Okay, we're starting to move the needle.
Thank you for listening to the podcast. I hope you found value in this episode. Since you have made it this far, please be sure to subscribe to the podcast wherever you're listening right now, and also leave us a 5-star review. This podcast was produced by Chigozie Uba and edited by Africa Business Radio. We'll see you again on the next episode, and until then, have a wonderful week.